Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott. We've got a fun, exciting episode on a topic we continue to cover because it's so important to all of us, both as investors and entrepreneurs, and that's early stage venture and seed investing. What's happening? What is going on with these areas of venture? I mean, as entrepreneurs, this is your first and second round. This is that friends and family, that early seed, that pre-seed, that seed, that maybe even early series venture. What do you do? What should you know? What areas are getting funding? What areas may not be? What regions, etc.? What should you be preparing for? How do investors even think about early stage companies compared to those companies that may be a little bit more later stage? And as investors, you need to know all this information too. So we're here as investors to open up our brain to share all this exciting information with both of you on both sides. So as entrepreneurs, you can know how we think as investors. Prepare yourself for your upcoming fundraising rounds. And as investors, get all the knowledge you need to make some good investments and find some great opportunities and trending information of where and what to be looking for. With that, a big thank you to the LATOKEN team and to Maria for making today's episode of VCTV possible. Make sure if you haven't already, you've clicked subscribe, shared the episode, given us some likes ahead of time because it's going to be a great episode, so you might as well get the likes in now. And checked out the archive on latoken.com to hear from today's speakers and all speakers of the VCTV family. Also, the comment box, I keep pointing this way because it's this way on my camera, but this way, the comments box is open. Say hi. We'd love to hear from you. And also feel free to ask any questions as well. And we'll do our best to ask them in real time. You got 4 great investors, tons of fun here. Throw them in. We'll do our best to ask them. With that, let's go ahead and jump in and introduce today's guests and co-hosts. Gavin, welcome back to the show. A little intro, a little background for everybody.
Yeah, hi, Kyle. Thanks again to you and the LATOKEN team and VCTV, of course. Always a pleasure to be here. So by way of background, Gavin Johnson, my background is in science and engineering originally, but I'm a qualified lawyer now. I'm doing a lot of work in what you might call the built environment technology space, which is quite a rapidly developing area. A lot of new technologies coming out, particularly around modern methods of construction, smart cities you might think about, tokenization of assets and things like that. It all gets very exciting. NFTs recently been in the news for good and bad reasons, and maybe we'll touch on that a little bit later. But aside from all that kind of fun stuff, I do a little bit of angel investing. I have no particular, I suppose, predilection for the angel investing. I'm interested in fintechs and I don't know, LATOKEN, Proptech, anything that comes along that's interesting, looks like it's going to do something. And I guess I'm happy to talk about anything that comes up. I have a strong opinion on most things in life, so please feel free to bring it on.
I love it. Again, audience, if you haven't already liked this episode, you should, because it's going to be a lot of fun. With that, Raghu, welcome back to the show. A little intro, a little background.
Thanks, Kyle and VCTV. Definitely enjoy these shows. I learn a lot. And I'm a serial entrepreneur, angel investor, and strategic advisor from Princeton, New Jersey, helping early stage companies and mid stage companies, depending on the area, from seed to harvest. We have an extended virtual team that can help with strategy, execution, exit. And my areas of interest are biotech, clean tech, cybersecurity and privacy, and fintech, early stage de-risk social impact opportunities.
Thank you, Raghu. I see you looking to your notes. You know all those industries. You talk about them every day here on VCTV, but I see you looking at your notes, making sure you get them all in. So for those that are listening, again, we're having a fun day today. It's Thursday, but Raghu is an outstanding investor. If you're looking at anything in cybersecurity or bio, that's the guy to connect with after the show. Last but not least, joining us from across the pond as well, Gianpaolo, welcome back.
Thank you for having me here, Kyle. Welcome, everyone. This is Gianpaolo Parigi. I'm a serial entrepreneur, investor, and advisor, and coming to today's topic on LATOKEN VCTV, early stage. I've been several times in that quandary as a founder, as an investor, and as an advisor. So very happy to share whatever I've seen, going round the block several times. Back to you, Kyle.
Thank you, Gianpaolo, Gavin, Raghu. Excited to have all of you here. So I wanna throw out just a little bit of a question for you to think on for a few minutes. As I'll ask another, is your first time fundraising as an entrepreneur, and some of the things that you wish you would have known then that you know now, because fundraising is not an easy process. It is a huge, huge task. Instead of reaching out to 1 or 10 people, it usually takes reaching out to tens of, sometimes hundred of people to make those connections to even begin the journey. There's so much that you have to be prepared for and think about, and it's a whole different ballgame. So think about it. We're going to tell our first stories here in just a little bit. I think that's going to be great for the audience to hear. But before we jump into that, I want to come to each of you on these respected areas of industry that you focus on and get a little update as to what's happening on the early stage. So Gavin, you mentioned NFTs. We're going to hold on that. That's going to be last today. But in terms of construction and prop tech and even a little bit of fintech, what are you seeing on the early stage seed investment side around that industry right now that people may not be aware of that they should be on both sides of the table?
There's quite a few things actually. I mean, fintech is forever rapidly developing generally. What I'm probably seeing more of is more, I suppose, non-European, non-North American centered startups. Whilst the solutions may have a familiar feel to them, and we could name a variety of startups that would all recognize, those are not necessarily global solutions. And there's a lot of, I suppose, nuance regionally, particularly around financial regulation, that probably precludes them, the ones we know about, moving into those areas. So there's a lot of localized, I suppose you say localized startups, and I mean, to an area. So you may consider Africa locally speaking. I'm seeing all of that, new payment rails coming through, more direct electronic type payments, and I suppose along with that you're seeing not a deregulation but an improvement in access to the regulation, if that makes sense, and maybe we can talk about that a little bit later. But so fintech, definitely new payment rails. Proptech's a bit of a funny one. There's a lot of moves to I guess commoditized processes, certainly changes between I don't know, certainly on rentals, helping renters move and change quicker and easier, connecting them with estate agents or landlords, whatever it may be. There seems to be a lot of move around that facilitation piece. I mean, beyond that, I'm seeing a lot of, I don't know, very crazy sort of the NFT stuff, which is really at the edge of, I don't want to say mind-boggling, but you're getting into some weird tokenomics from my point of view on that. But that's probably the gamut of it. A lot of sort of biotechy type things coming out, but I know Raghu is much more in tune with that area than I am.
Well, speaking of bio, Raghu, I'm going to come to you. Bio and cybersecurity. Thank you, Gavin. And actually, real quick, Gavin, just to define Proptech, property technology, is that correct? So technologies relating to properties, whether that be real estate, whether that be the property purchasing and documentation. Is that correct? Right way to define Proptech in your eyes?
Yeah, that's a really good point. I mean, part of the challenge, and I looked at a presentation yesterday that was still working on defining smart contracts in a sort of quasi-legal sense, which is a bit of a misnomer. But yeah, the Proptech, broadly speaking, to my mind anyway, is anything property associated. So you'll see it, people trying to, I suppose, tokenize that conveyancing process, for example. So you'd say, well, there's a Proptech solution for real estate purchase, but a lot of movement around lease renters, trying to facilitate and simplify that sort of change, automate leases, particularly for residential renters, not commercial. Commercial is in the UK anyway, is a whole other ball game.
Whole different.
US crowd gets
whole different beast. No, I appreciate it. Thank you. And by the way, hi everybody. I'm seeing we've got highs, we've got heys, we've got hellos, everything in here. So thank you very much. Hi to everyone that's dropping into the comments. Hi, Mohammed. I'll call you out. You said hi as I did it, so there, we'll even throw you on camera. Boom. Hi, Mohammed. Okay, Raghu, back to you. So biosecurity, tell us a little bit about what you're seeing in the
Sure.
space.
To give you kind of a temperature range here, like the hot pepper thing, right? Cybersecurity is super hot. Fintech is very hot. Biotech, medtech is quite warm, and clean tech is warming up. That's how I would put it right now. Clean tech, a lot of money is coming in, especially infrastructure money. So cybersecurity, I've seen lots and lots of early stage investments recently, especially related to cloud security and ransomware. As you know, ransomware is a rampant problem, and solutions around that are going to be something very, very hot. So that area, fintech, I think to some extent Gavin talked about it. Again, they're kind of related. Cybersecurity is needed for any of the fintech platforms, and AI is also another base technology that is helping all these areas. Biotech and clean tech. I mean, biotech specifically, again, because of the kind of revival of the virus strains and the variants. I think especially in a lot of countries in Europe and India and all that, there is I think understanding now that this is not yet over, the pandemic, and there is more of a long-term solution that we need to do. The vaccines are getting us there. It's great that we have had vaccines and the vaccinations are going on, but there needs to be a kind of a more long-term solution, both in terms of even vaccine deployment and the diagnostics, all kind of continuous testing that you're going to need to kind of open up the environment and the economy for safe participation in all kinds of things, hospitality industry, transportation, back to school and work. So I think it's an exciting time for early stage in cybersecurity, definitely fintech, biotech. Yes, and I think there is lots and lots of opportunities.
So real quick, Raghu, I'm going to come back to you real quick on security. So security seems to still be something that people have not found very attractive or not very exciting to dive into. And any reason why? I mean, it's starting a security startup at the early stage, or maybe even investing at the early stage, still seems like a great idea. I mean, security needs to be baked into everything that we do, and yet it seems to be the last topic that anyone wants to talk about.
Yeah, the issue in cybersecurity is that there are a lot of service providers. It's a pretty crowded market from a service provider perspective, but in products, there's a lot of scope for innovation, and also how you look at it. Decentralized cybersecurity is very, very important, because now with quantum computing providing all this compute power to break traditional encryption, you need ways to prevent quantum hacks, things like ransomware, which come and encrypt on top of your data. So whatever great encryption you might have for protection is useless if they're encrypted on top of your data. So you need a kind of a little bit of out of the box thinking, which decentralized cybersecurity brings in. We want to be able to reduce the attack surface and increase the protection. So there are three aspects, right, to data protection. There's data privacy, which is about actually keeping the data out of people being able to access the data. There's data availability, like ransomware, something locks up your data, you still want to continue. It's a business continuity issue, data availability. And then there is data integrity, where people come and corrupt stuff, and and then the breaches and stuff. So you need to address all these three, and of course there are regulations and compliance. So compliance is another great area, because they are must-haves as opposed to nice-to-have.
There you go. Thank you very much, Raghu. Gianpaolo, I want to come to you next. I mean, you focus on many different areas, but you also work with your own family office and other organizations and funds. I mean, what are you seeing happening in maybe in general or specifically around early stage venture capital right now?
Well, I think the early stages is a defining moment for any company. It's a moment when companies come of age. It's a moment when you get out of the family and friend circle that could have been particularly forgiving of your mistakes, of your overseeing certain aspects of the business or not addressing them really properly. It's a moment in which, you gotta get professional, and because you are dealing with third parties that are, remoted from your inner circle of interests, and most of them are professional investors. So you are really going under the scrutiny of people that do this for a living. And I'm not saying that they be necessarily merciless in the analysis of your company and your business, but definitely they will vet appropriately, as they should, because either they manage direct money or they manage on behalf of others who have empowered them to do that. So obviously they carry great responsibility on their shoulders. So it's a moment when, if everything has been done properly up to that point, the rubber meets the road, if the approach had been correct to the runway, and if there's been mistakes, on the path, obviously when you turn on the fan, you know what happens. But again, it's a moment in which you begin to assess the variance of your own course over the stated objectives that you had in mind with other co-founders, if you had co-founders back when you started. It's a moment in which alibis are no longer valued. Actually, in my opinion, they should not even be used and applicable when you are with family and friends, because, business is a business. I always take a dim view of people that say, I invested on the sideline in something else and as a hobby. And I always say, hobby is a hobby. A business is a business. A business, unstated objective is first and foremost is to legitimately, make money for everybody involved in the business and possibly benefit the stakeholders at large. So, and it's not a hobby under any circumstances. So I think it's a moment in which you can begin to, weed out the good from the chaff, and it's a moment of realization, as I say, also for the entrepreneurs, because, it's a moment in which they have to be faced with the vagaries of very complex markets, financial markets, capital markets that are way beyond anybody's control, and for sure way beyond the control of a nano cap company or a micro cap company. And so it's important. A lot of people retreat back into corporate or employment and decide that business is not for them. It could also be a good option. It's better than digging your grave deeper. I mean, if you're not really, I would say, fit for it. I mean, I find it more linear perhaps as an approach. But of course, for those who are persisting, they have the staying power, the stamina to go through everything. I mean, it's a fantastic moment, because you begin to reach the first hilltop on your long route as an entrepreneur. And obviously, when you reach that hilltop, you get, some better horizon and a panorama. And you discover that then you have a mountain range to climb, down the road. But still, you will have more gear, more equipment. You'll be better prepared, and you will have possibly companions on the road that are senior to you, that are skilled, they can mobilize resources, and they can solve issues or address issues before they become critical issues. And now just I want to keep talking about all these sectors in which we work. I think that technology pertains to every sector. So I would like to have this motion seconded to remove the suffix tech from the industry sector names, because we have to go back to call them property, because a property company without technology is not a property company anyway. Same goes for finance. There's no finance company that is not a fintech company nowadays. And if still exists a company in finance that is a old school fashioned finance company, it's doomed to extinction pretty soon, probably before this webinar is over. And so I think I wanted just that was just quipping on the fact that we have to waste an inordinate amount of our time saying the suffix tech at the end of every sector that we deal with, just for fun. Thank you. Back to you.
Couldn't agree more with you, Gianpaolo. Thank you for calling that out. So no more X techs. We are talking about finance. We're talking about property. We're talking about whatever bio it is. The industry, no longer technology tied to it as well, because it's all a part of it. To Gianpaolo's point, Gavin, talk to us about NFTs. You said you had a little bit of knowledge around NFTs and tokenization, and I'm not sure if you're seeing the same thing. I mean, from a early stage side, super competitive deals right now. There's a lot of money, and by that competitiveness, I mean there's a lot of capital being poured into companies at all stages of NFTs, whether that be the companies that are the platforms, the minters, the showcases, whatever it may be. NFTs, non-fungible tokens, seem to be the hot area of seed capital right now, and tokenization as a bigger picture is starting to get the attention it deserves as well. But with that, tell us what you're seeing.
I'm seeing. Well, I suppose I'm seeing a lot of chatter around it from my own perspective, certainly a legal perspective. I do wonder whether we're really geared up to understand what the implications, ramifications of these are. And just earlier today, I was on another call, and there was a lot of debate around the nature of what the NFT was, or what it was supposed to be, what it was supposed to do. And in many ways, it becomes a legal question, because you're saying, well, we've got this thing, let's just call it an asset for argument's sake. It has some properties, but then there's an argument about what properties it should or should not have, what it represents. And even before then, I was involved in conversations a couple of years ago now that really got into a very nuanced legal debate about whether or not the token itself was the asset, or whether or not it was a representation of the asset. And it's very important, and it's a subtly different thing, very boring thing, I suppose, for some, but it's very important for lawyers to understand, because if we're going to be writing contracts off the back of this, maybe that sell that token, you need certainty around what it is you're selling, what it is you own, what rights that comes with. So there is a lot of debate at the moment, and it's trivial to say, oh, well, I'll just tokenize it. Well, that's great, but what are you tokenizing? What are you adding to it? And you need to be very clear about what it is you're doing, the rights that attach, and follow that, because that will trip you up. You try and sell it, and you discover you've actually not got the right to sell it, because it wasn't enshrined within the rights you had. You just have the right to hold it. Now, it sounds ridiculous, but there will be cases that come out of disputes around this. So, to my mind, whilst conceptually you think, okay, let's tokenize that, and let's allow us to do something with it. And in simple terms, surely the purpose of and I know we call them non-fungible, but it must be for tradability's purpose. We must be able to do something with it, lend it to somebody, or whatever it may be. And I'm not convinced at the moment that the technology is there, and the legal understanding is there to allow that in the sense that we're all used to. So I don't know, I'm trying to think of a ridiculous example that proves the point. Maybe I can't do that, and maybe I shouldn't do that, more importantly. But just to say, oh, well, let's tokenize isn't really an answer, and it's not good enough an answer. So if you are thinking about this, and thinking about how you achieve this sort of this tokenization, which is great, and of course for liquidity's purposes, absolutely it should be something investigated. But I think you need to be very careful about what it is you're attaching with it, and you see it, I suppose, by analogy to some extent, you see it with cryptocurrency trading, that there's a lot of coins, and you think, oh, great, let's trade some coins, let's have some fun, let's sell some of this and buy some of that. But what is it you're actually doing? What is it you're actually trading? And in many ways, many of the tokens are sort of a permission of rights. They're nothing to do with currency in any way, shape, or form, but it's an exchange of rights. So if you buy a load of tokens, and it's a DAO token, say, and all that comes with is some rights to vote. Well, okay, you own the tokens. Are you voting? If you're not voting, you're not participating in the ecosystem. So what was the point in buying the token? You're just trading speculatively. Now, that's not very helpful. And I know I'm going around a little bit in circles here, but it's a complex issue, and it's not well articulated from the projects I've seen anyway. I mean, maybe I'm just looking at terrible projects. Who knows? But you know, the point is there that you really need to think very carefully about what you're doing. And there's a lot of clever people creating a lot of very, very clever tokenomic structures to allow this to determine value in its crudest sense. You know, whether you trade it or whatever you do with it, exchange values in some way with somebody. That's the purpose of a blockchain and a token. Ultimately, you're exchanging value, not necessarily monetary. But you've really got to think very carefully. And I think there's a lot of grey, and lawyers thrive on grey, and they will charge you a lot of money for grey. So, which is a note of caution, I suppose. If you don't want to lose a lot of money on lawyers, get out of the grey.
It's a very good point. I mean, look, I rattled off the stats yesterday. Pardon me, I'll rattle them off again. I mean, according to recent reports by nonfungible.com, we saw 2 billion with a very big capital B dollars in transaction volume around NFTs in the first 3 months of this year. All of 2020 was $250 million. Okay, that 2 billion does not include Top Shot, according to Crypto Slam, which is about 500 million. So now we're at 2.5. Also doesn't include Nifty Gateway. So we'll just say we're around 275 to almost $3 billion done in 3 months. And to your point, there is some gray area that needs to be fine-tuned, which, for those listening, is a great opportunity to start building in and start taking advantage of as an entrepreneur. So there you go, entrepreneurs, we're thinking of you. So with that being said, Gavin, Raghu, Jean-Paul, a little fun on a Thursday. Even though it's not Friday, we're still gonna have fun here on VCTV. Your first time raising capital, or a good capital raising story. What would you have wished you knew as an entrepreneur then that you know now that would have maybe changed the complete outcome of that meeting? Raghu, I'm going to have you go first.
Sure. I think the importance of the team. See, I grew something organically. My first venture, which worked out well until I ran into rough weather at the .com bubble. I mean, the burst after the bubble. And I suddenly did not have a team of advisors, people who could help me when, when you hit, adverse situation. So it's very, very important and to have a right team of advisors, and also in the core management team, have the diversity world into the federal government space. This is back in, 2000. It was one of my advisors who stepped in and put in a $400,000 investment, which I'm glad to say he made probably north of 15 million on that. But at that time, it helped me actually keep the payroll going, transition from young web developers to senior consultants. So I could go after into the federal government market. Luckily, I was able to go right to the top, to the White House. So, but that it was one of the advisors, and time and again, having those right advisors who can open the doors for you, both in terms of customer traction, getting pilots, and getting funding. So I would say building the best team of advisors that you have, so that you can learn both the best practices and things that you can avoid, mistakes that you can avoid.
Couldn't agree more, Gavin.
Some of the questions. Fun on a Thursday, first time. Should be careful there, shouldn't I? Shouldn't just say that first time. I think Raghu makes a really good point about, if I can broaden that out a little bit, knowing your audience, and that is talking to the right people, and that's very hard to do. You'll meet a lot of people, and they won't want to be unkind, and they will say, "Yeah, that's a very good idea." Blah blah blah. Let's talk. You don't really want that. I know it sounds awful, and if I go back, I think Kalakanis makes this point in his book. If you're not going to invest, or you're not interested, just say it out of the gate. And it's something when I'm approached now, if it's not in my it's not in my area of interest and it's not something where I feel I can add value, I'll just say, like, it's a great idea, but I it's not for me. And getting that out of the way up front, don't waste people's time. And something that I get quite annoyed about is, I know, because I've invested time in preparing for this meeting. I've got my answers. I'm all set and ready to go. And within a few minutes, this isn't actually going to go anywhere. And then everybody's very polite. You continue, and you get to the end of the meeting, and it's a no, but it's still very polite because we are polite people, and it's just a monumental waste of time. And there is this thing about it's not failing fast and often and that kind of thing, but it's a little bit of honesty in all of this. And this is why I say go back, know your audience, and know who it is you're approaching, and have exchange some messages on email, LinkedIn, whatever platform. Just do it beforehand. Get it out of the way. If it's not for them, don't flog that horse, and move on. But the one caveat to that is that if it's something that I know someone in my network might be interested in, I will offer, look, it's not for me, but I will pass it on if that would be of interest. Sometimes it's a no, we've got our own network or whatever. Sometimes it's a yes, and of course I'll pass it on. Sometimes my network will say, no, this is not for us, this is a silly idea, and be brutally honest. I won't necessarily pass that on. But I will poll that view as well. So it is that know your audience and getting to a no faster to allow you to sort that wheat from the chaff of people who might be interested and might be willing to actually write a check and give you some money to get on with it.
Agreed. Gianpaolo, thank you, Gavin.
Well, as a founder, definitely I would have liked to have what I know today as an investor in terms of know-how, in terms of global connections, in terms of really having seen what I've seen. But actually, not so much for the first few deals that I did, because I was lucky enough that I had investors coming to me on those 2-3 deals initially. So I didn't even have to go raise. I mean, they came to me and I could close it. It was not always so beautiful in other transactions, but as I say, not for those initial deals, and as much as for the deals that I could have done and I didn't do just because simply I wasn't capable of seeing them as deals. And so this is the, if we could, rewind back in time and bringing, expertise, experience, know-how, and transactional, track record baggage back with you, that's what I would bring back. And this is from a founder's perspective. For founders also, coming back to the point of honesty that Gavin has punctually raised, I would say that really honesty is important. Honesty not only in terms of being within the boundaries of the law and compliant, but honestly, intellectually honest, to be clear as to what is the primary purpose of you as an entrepreneur approaching investors. Because investors are supposed by definition to invest with you, on you, and they want to be sitting with an entrepreneur, knowing that it's an entrepreneur that they are dealing with, and not somebody that, for example, is looking for a job in disguise. While looking for a job is absolutely, I would say, understandable, especially in times of trouble and global crisis. I think it's a little bit of a devious approach to engage VCs, business angels, even corporate investors with a view to setting up ventures together and then discovering that the founders are only after the first job that might be up for grabs. This is always, I find it quite disappointing. And as I say, there's nothing that cools off a potential relationship as having been misled from day one. And of course, we have ways to not to waste too much time on those particular types of risk, because we ask the right questions right off the bat, and we may have wasted maybe one call or a few minutes before we discover it. I mean, savvy entrepreneurs, savvy investors do that. But I think it's important to remind, for those out there in the audience that it might be just better to come out loud and say, I'm applying for a job, I'm looking for a job, can you help me with in your organization or with someone else? Having said that, in terms of referral, normally I don't do referral from the entrepreneurs to the investors, because if I have not been in the position to vet those investments myself, I'm not going to bring the next investors to them saying, oh, I cannot do it, maybe you want to do it. I would act inversely on requests from fellow investors that ask for particular targets, and then, with all the due representation of the case, I would say, yes, there is a deal that I haven't made, but it looks like there's something there, and so I would just do the referral from the investors on the investors' request to the founders, but from the founders to the investors, no, if I'm not involved, because my name is on the line. Every time that I would call a colleague and say, you want to do this? What would be my advantage? What would be the colleague advantage? Nobody knows anything about the deal, and we need to have proper assessments and due diligence completed before we can say, okay, I put my finger on it. So I'm a little bit peculiar, I know, on that, but this is my stance on it. Back to you.
I look, totally understand. I think aside from everything that's already been said, when I walked into my first pitch, the two other things I personally would add is feedback and then the process. So feedback, you go in thinking you know everything and that you're 100% right. And that's okay. You should. You're the one building something. But the feedback that you get, understanding how to filter that. So the feedback that you get may not always be relevant. Some of it may be highly relevant, but understanding how to assume that feedback, digest it, understand what needs to be adjusted for, what needs to be re-looked at, and what may be just as good to hear it and pushed aside as well. And I think the story of my first pitch is highly entertaining. And that's one thing I definitely did not take away. And I wish I would have. Because the investors that I did pitch gave me great feedback, and I pushed back and said, no, I know what I'm talking about, and I obviously did not. So that was the story of that. But the other thing is just process and timing, as we were talking about earlier, is process itself. It's not a one and done game. Sometimes you have to reach out, as we spoke about, to tens and sometimes hundreds of people. I know founders that have reached out to over 100 different investors. I know others that, again, have reached out to tens of investors. And the reason for that is it may not fit everybody. It's good to do your research, figure out who's investing in your area, but also know, raising $1 million, that could be one check, that could be 10 checks, that could be 20 checks, that could be 100 checks. And so you need to balance that. And that also goes into who your investors are and the strategic value, as Raghu mentioned, that they can bring to you as a part of that team. And then the process. This is not something that necessarily happens in one day, 1 week, or 1 month. And in some cases, not 3 months. This is something you need to prepare for to be a 4 to 6 month plus process for most companies. Go ahead, Jean-Paul.
Yeah, I know we're on close, but I would like to say, coming to the time in raising, on average in the US, in the last 2 years, 3 years, an investment fund takes about 3 years to reach full capitalization. And this is a vehicle which is fully regulated, run by people that are professional in the industry and already vetted and known by a lot of other colleagues and investors. So you want to think about that, unfortunately, when you're a founder. And again, I go with what Raghu said, get your help, your assistance, your advice as quickly as you can, because there are sometimes possibilities to shorten that time, but you gotta be prepared for a journey, which is crossing an ocean and not just hopping on a pond. So long legs are not enough.
That's a great point too, because you bring up investment funds. So of all the things that we said, that is one thing that most people don't talk about, is for entrepreneurs to understand how investors work, how investors think, and how funds function. And there's great books out there. There's great podcasts. There's great articles. You can read the book Venture Deals, which will open up the entire world for you as well into this. And just understanding exactly something that Jean-Paul mentioned is that, fund raises capital, but they have to deploy it in 3 up to 5 years. In some cases, a little bit of in between there as well, and how they deploy it, how they save for dry power to follow on for you, how firms work, how they support their companies. All of this, I had no clue. Most of you probably didn't either the first time you went out to raise. We all do now to some degree. And so that's another thing. But with that being said, thank you all. And Gavin, Raghu, Gianpaolo, quick closing thoughts. Where can you be found online so you can go enjoy your Thursday and the audience can come out and connect with you as well? So Gavin, any closing thoughts? Where can you be found online?
Oh God, good luck. That's the best closing thought I can benchmark. Is something I would test your ideas. I know they sound brilliant in your head. Test your ideas. And I don't just mean friends and family who will all just say, that's fantastic. I can't believe you've come on, never thought of it before. You know, connect with people and connect with people on LinkedIn. I'm on LinkedIn. There's a nice link. What do you think about this? And a lot of investors will give you the 5-minute assessment and say, yeah, okay, I can see this. No, that's ridiculous. Try again. But that's what I would say. Try and benchmark your ideas, and don't just rampage ahead in the blind belief that you are absolutely right. Okay, try it. Is there a need for it? You do need to do that sort of market research element, and it is critical. And people don't, or they skip over it a little bit. And you think, no, do the due diligence, do the work. Otherwise, I mean, I'm on LinkedIn. That's probably the best place. And just look me up. I'm sure you'll find me. I don't know if you use Signal. Probably find me on there as well. There you go. I'll name drop a few things. WhatsApp, not so much. Thanks, Facebook. But yeah, LinkedIn's probably the best friend. Not Instagram. I'm not that kind of. I'm not an influencer. There you go. I'm not an influencer.
Ladies and gentlemen, Gavin Johnson is an influencer. He just doesn't want to admit it. Check him out on LinkedIn, but you will find him as an influencer. He's TikToking, he's Snapchatting, he's Instagramming, he's all over the place. So don't you worry.
You name it.
Just
an hour TikTok challenging every evening.
There you go. Pitch him via TikTok, ladies and gentlemen. Raghu, we're any closing thoughts? Where can everyone find you?
Sure. You can find me on LinkedIn at Raghu S. Rao. I think in terms of closing thoughts, I would say be coachable, so that, which is what I think Kyle's point was, that, it's all great to have the greatest advisors, but if you don't listen to that feedback, it's useless. So you need that humility to be coachable, and then, go from this whole journey of knowing what you don't know, right? Which is, I call it unconscious incompetence, to conscious incompetence, and ultimately want to get to unconscious competence, right? That's what we want. So good luck to everybody.
There you go, Gianpaolo.
Well, I mean, as a founder raising, I mean, you don't have to become a contortionist, but definitely you'll have to be able to bend. So a certain degree of flexibility is required. And so, bend up your physical shape and stay fit. And because this is very, very important in the mind, in the body, in the strategy, in the business, with the team that you bring on board. You can reach me on gianpaoloparigi.com, on LinkedIn, on VCTV or LATOKEN, Instagram, by any way, shape, and form you want to digit in the virtual space. You reach me. Thank you very much, everyone.
Thank you, Gianpaolo, Raghu, Gavin, our influencers of today's world in VCTV. Definitely, audience, make sure you connect with all three of them. Add context where you heard them, where you met them, and what you would like to continue the conversation about. And as Gianpaolo said as well, this is a long journey. Any company that you're building, and it's also a long journey for those investors investing in you. So stay fit, both mentally, physically, and make sure that you're having fun while you do it, and that you are enjoying the team that you've brought together on both sides of the table. Gianpaolo, go ahead.
Sorry, I didn't want to take the closing remarks from you because they belong to you, but I wanted to say, when you embark on that type of journey, you don't know if you're going to reach the West Indies like Columbus was thinking of, or something else, or nothing, or you perish as you go. So the reality is, that's the beauty and the fascination and the challenge of being in business. And when you raise capital, it's not that you're going to have capital at the end of this particular journey just because you so say or you so require. It's not written anywhere. Maybe you have to take two journeys.
Couldn't have said it better myself. Those are our closing thoughts, ladies and gentlemen. Happy Thursday. Check us out on LATOKEN.com to hear from today's speakers and all speakers of the VCTV family. Big thank you to the LATOKEN team and to Maria for making today's episode possible. Again, reach out to all of us online. We'd love to hear from you. Definitely check out our influencers, Gavin, Raghu, and Gianpaolo on all social media platforms. Send out your TikTok challenge as well. But with that being said, we'll see you back here tomorrow on more VCTV. I'm your host, Kyle Ellicott. Thank you very much, everyone. Have a wonderful day.
Thank you. Bye-bye.